Welcome back to the Big Skinny with Lou Basenese, coming at you live from Nicaragua. And here's the coolest thing, I think. I mean, there's a lifelong friend in the industry, a phenomenal analyst who happens to be in Nicaragua as well. He spends a lot of his time here. So I want to welcome, with a big skinny welcome, to Matt McCall, founder of NextWave Research. Pleasure to have you, my friend.
Pleasure to be here, Lou. Great to see you the other night, and it's amazing how close we are doing this. You can do it from around the world, but we're 100 meters away from each other. It's pretty cool.
No, it's amazing, man. And who would have thought? If you said to someone 10 years ago, you guys are going to be doing a live stream from Nicaragua, adjacent buildings, everyone like, we don't even have internet here yet. So
exactly.
No, but listen, I think that's been the hallmark of your career. You've always been early and more often than not right about trends. Would love to get your thoughts on some of the biggest trends you're tracking as we kick off 2026. And right out of the gate, I mean, are you a gold bug? Do you think crypto is more interesting, or do you think a whole other asset is better, like critical minerals? Where do you fall down on this crypto crash and the reaction?
A good question. I am personally heavily invested in Bitcoin. I've been since $600 a coin. I've never sold. So I don't plan on selling anytime soon. I actually borrowed against some of it building my house here in Nicaragua. But I'm still very bullish on Bitcoin, but it was a rough weekend, seeing it break support. So I realized that a lot of people are giving up, throwing in the towel, but I'm fine. I still think we hit an all-time high by the end of the year. I think it's just, this is the natural, kind of 35 to 40% pullback you get in Bitcoin. We're right around that average pullback right now. Gold, not a gold bug. I'm probably the opposite. And the gold community tends to think I'm a real ass because I think gold bugs are absolutely out of their mind, because it's like dealing with an extreme leftist or extreme right, somebody extreme right. You can't debate them. There's no, debates. And that's how gold bugs are to me. So I think gold's great to hold it. I listened to you a minute ago, Lou, talking about debasement of currencies. Great argument for gold. It's fine. I just am not a big fan of it.
Yeah, look, I've never been either. I would tell you that, right, the gold bugs have been going to the Vancouver Investment Conference for over 25 years. And I don't think anyone there has ever sold gold. It's a forever hold for them. It's always a buy. Doesn't matter the conditions. So I agree with that. But all right, so what do you make of the surge in rare earths, right? Critical minerals. I mean, are you a player in that space? Do you see that as the next, resource constrained or capacity constrained, supply constrained market where you can scoop up some big wins?
I absolutely love it. We have a bunch of portfolios in all of our newsletters. One of them is based on critical minerals, and we've had that one for several years, and it's been our top performer outside of nuclear energy. It's something that when it comes to metals and mining, gold doesn't excite me. Silver doesn't excite me. These other things do, whether it's one of the rare earths, whether it's antimony, copper is probably my favorite trade this year. It's a simple supply demand. There's a use case for it. There's supply that's not growing, dwindling in some cases, while demand goes through the roof. And it's not just this AI trade. The thing is, the grids were so damn bad prior to this AI boom, with all the data centers. We needed more copper and everything anyway. And then you throw in Trump and you have the reshoring protectionism of the U.S. I mean, it is a perfect setup for a trade. The only thing I will say, Lou, is, a lot of them pull back from the highs. They're not going to go straight up. This is a 10-year play for me. There's going to be massive pullbacks and massive rallies on the way. I'd say buy into the pullbacks.
Yeah. So, I mean, it's interesting. What's your favorite ways to play it, right? Because people hear commodities, copper, silver, gold, antimonium, tungsten. It's like, how the heck do I get exposure? What's your recommendation for people that this is the first time they're treading into these waters? What's the way to ease in? I always say ETFs are the starter, and then you figure out the best pure plays. But how would you recommend that to people?
I'm a stock picker. Back in my career when I managed money, 20 years ago, I was huge in ETFs when they first kind of launched. I built all my portfolios with exchange traded funds. And then over the years, I realized, the more work you put in, for somebody like you and I that can put the work in, stocks are so much better. And so I take what I call basically a basket approach. So I'll look at the industrial metals and critical minerals and everything, and build maybe 5 to 7 stocks in there, individual stocks that touch all different angles. You're building your own ETF. It doesn't cost anything to buy stocks anymore. Why pay the fee for an ETF? Because what happens, Lou, the ETF might have 35, 40 stocks and 15 are shit. So what's the point of owning them? You don't want to own all that. So I like individual stocks for me personally.
Yeah, no, I agree with that. I always is the on ramp to massive gains is the ETF, right? It's the starter drug that gets you addicted
Yeah,
to the space, and then you
exactly.
figure out where the purest form of returns are. Not to get down a random tangent, but let's talk robotics and semiconductors.
Sure.
Teradyne. Right before we started the show, I saw you tweeted out to your subscribers they're now doubled their money in Teradyne, which was one
Yeah.
of our stocks that we featured in our list of 10 top AI stocks not named Nvidia. I love it because of the
Love it.
robotics exposure. What is your thoughts on it? Because you've been a
Yeah,
long
me
time
too.
holder of it.
Yeah, they own Universal Robotics. So for me, it's like the cobots, like the collaborative robots, which, you're gonna have humanoids, and I'm a big fan of Tesla and humanoids, but the co-robots are basically what you're gonna see first. And the arms that are moving all over. And it's just this is a trend that you're seeing in Asia, specifically China. US is so far behind. Robots per manufacturing employee, we're way behind China. We're gonna catch up. And Teradyne is one that I think we put in September of 2024, so not that long, but I think we're up 138%. But the lesson about this one, Lou, is crazy. Teradyne was down for us in that portfolio like over 40% at one point. And you talk about
Oh
being early.
wow.
Sometimes you have to weather, like you're down 40% and it hurts. And then you wait a year later and you're up 140. So I mean, we did take a bit of a hit there earlier, but we didn't sell. And when we're buying into these trends like robotics and automation, it's a 3 to 5 year, if not 7 and 10 year trend that timing's not always perfect. So something like Teradyne to
Yes.
me, even though it's run up this much, I almost considered selling before earnings because I was like, shit, maybe take the gain and run, don't risk an earnings. But I looked at it and looking at the long term, I mean, looks great and still a nice valuation here for me.
Yeah, no, I agree. I had a mentor once tell me that early has the same number of letters as wrong, but so does right. So you got to go through the wrong to get to the right sometimes. So
Exactly.
um, with that in mind, I was early and wrong about small caps and microcaps for a while, calling for a resurgence. I think finally we have the winds at our back. I know you agree. I saw some of your recent writings too. Like, what do you see changing the market dynamic for microcaps and small caps as we head out into 2026? I mean, they're outperforming now finally versus large
Yeah.
caps, but does this continue and why?
Yeah, I mean, I think it does continue. Look at the IWC, which is a Russell microcap ETF. Best performer of all the like small mid cap, you name it, this year so far, year to date. Look at the chart; it looks great over the last year. Broke out to a new all-time high as of late. So I think the breakout, number one, technical breakout's important to me. Historical, as you mentioned, they've been lagging for so long. And when you have that long of underperformance, it typically just natural reactions, the pendulum, like it swings back the other way.
Yeah.
We do have interest rates, which I think once the new Fed chairman comes in later this year, we will see interest rates be down. I think we're going to have 75 basis points to the downside. That's going to help
So,
small caps when it comes to borrowing.
so you think it comes in 3 cuts, or you think it's a jumbo cut and then one more?
I think it's 3 cuts. I think they're going to spread it out. I think a jumbo
Yeah.
cut gets the media on Trump saying, you did this, you pulled the strings, where if it's 325, he can kind of take a step back. Shit, he would want
Yeah.
150 basis points today if he could, which he's not
Right.
getting. But I think there's just a lot of things lining up. And think about this, that you mentioned, kind of the reshoring coming back to America. That helps a lot of small cap companies as well.
Yeah, no, look, they have by and large 100% revenue generation in the US, right? So for the most of them, so much more so than the S&P 500. Any individual names that you really have high conviction in the smaller microcap space that you can share, or just
Yeah, of course.
yeah,
Yeah, of course. We could talk about rare earths. NioCorp symbol NB is one that I like, and you can see here it's pulled back as of late. That's one I think that has a big upside. They have they're working to build a mine in Nebraska. So again, U.S. based rare earth. You love to look at that. Another one I'll throw out there, which it's called Montrose Environment. MEG is a symbol. MEG. Again, it's pulled back
okay,
from the highs, which I like. This takes care of the PFASs, which is the forever chemicals. It's one of the few companies that can get it out of the ground, the PFASs, and out of the water. And this administration is not pushing it that much, but I think this is something that's so important. I mean, you and I are healthy guys.
yeah.
We watch what we eat. We do a lot of things. These forever chemicals are horrible for your body. So again, a small cap play, niche player that I think could really do well as well.
Love it. Talk to me. You had in your forecast piece for the year, which I mean is awesome. People should check it out. We'll share a QR code how to find your research before the end of this interview. But you talked about European rearmament, or whether you like them or not. Trump really pushed back on the rest of the world and said, "Hey guys, like we're not paying and subsidizing buildups in defense for everyone. You got to start investing more of a percentage of your GDP." So talk to me about that thesis for the European rearmament and like one or two plays that you think are a really smart way to benefit from it.
Yeah, definitely. I mean, it's true. I mean, because the U.S. has basically been subsidizing NATO for forever, really. But now they've pushed back, and in 2014 they had a NATO summit, and at that point the NATO countries were supposed to have at least 2% of their GDP. We're what, 12 years later now, only 23 to 32 members meet that. Then,
Yeah.
last year or a year and a half ago, whatever it was, they now agreed to, by 2035, 5% of GDP. I mean, that's simple numbers. You're looking at hundreds of billions of dollars going into this. I mean, and I have a great chart of the EU military expenditure as percentage of GDP going back to 1960. It used to be around 4%. It fell down, below 1.5%, and now we're about 1.7%. That has to triple to get to the 5% in 9 years.
Yeah.
So, I mean, somebody's going to be making money, right?
How do you think about these? You think it's always going to, so we did an interview on our sister publication called The Upside with one of the oldest drone makers, right? Like, which is now the front leading edge of warfare. But where do you see European, rearmament happening most? Is it just in missiles and tanks, fighter jets? Like, where's the areas that are most efficient, and how do you play it?
I think there's both ways. This is kind of, like one of those portfolios where you want to play the old school because you still need ammunition and tanks, et cetera, but you want to play the innovation side of it, which is drones and things that, like, a Palantir's even in play on aerospace defense. But as far as the old school, I love Rheinmetall, which is Germany's largest aerospace defense company, and they have been supplying the hell out of the Ukraine-Russia war with tanks and ammunition. I don't see it ending anytime soon. Germany and a lot of these other large European countries, they have to rearm because not only are not spending enough on aerospace defense, they also lost so much by giving it away to Ukraine. So there's a double whammy there. So Rheinmetall's one that I would definitely look at. And when you talk about drones, I mean, there's a lot of great plays out there. RCAT's an interesting one. That is Red Cat Holdings. This is more of the technical side of drones, but military spending would help a company like this, small cap. So you take a very large company and a small cap, put them together. It diversifies your portfolio instantly with two stocks.
Yeah, no, smart, very sound advice. So let's finish up this interview with talking about AI's second act. So I think I said this before, and you've been a contributor on all these mainstream media shows. Like, the question I got asked for the last 6 months ad nauseum: is AI a bubble? Is AI a bubble? Is AI a bubble? And you're like, come on, like, we're not even, you look at the spending, we'll show a chart later on, like the Mag 7 companies just keep spending more and more. So, when spending and demand is outstripping supply, we're not in a bubble yet. But you have an interesting thesis on this, right? Like, the chips and the suppliers were the first wave. What's the second wave of profits, and how do you play it?
It's a lot of it's adoption of AI into a lot of the sectors that you don't really think about, and more practical uses. And I'm not talking ChatGPT. It's companies that are going to be using it to actually increase productivity. And that's why you're seeing the jobs number not as great, but you're seeing productivity really boom. You're seeing bottom line boom because you're lowering some of the overhead costs. At the same time, you're increasing your productivity. So anything from healthcare and biotech, it's going to be in there, to the robotics and automation we talked about, down to energy, financial services, transportation. You think about robotaxis, you look at education. So it's kind of the second coming of like software to me. That being said, the SaaS companies have gotten crushed year to date so far. So they've gotten hit. I think you're going to see a real bifurcation of winners and losers when it comes to this. So you really have to be selective in the stocks that will be able to take AI and actually use it for good, for their company, for productivity, not just, Googling funny images you send to your friends.
Yeah, no, I agree completely. I said it, and Satya Nadella at Microsoft said it was about discovery. Now it's about dispersion. This wave is like, how do you actually develop real solutions that solve problems instead of just discovering large language models? I think I remember correctly, you had for cardiac monitoring on your list, iRhythm. So we had a company on before, Heartbeam, that has a 12 lead device, but iRhythm's already scaling much bigger. Why do you like iRhythm? What exactly do they do for the audience that's unfamiliar?
Sure. They've been around a long time. This is a company that's been kind of a leader. So it's cardiac monitoring, which obviously, heart issues is a major deal anywhere in the world, especially with so many, diabetics and people overweight. But it's AI powered cardiac monitoring, and they're the number one leader in wearable devices right now. So I love the fact that, they're old school, but also they're melding the AI and the wearable aspect of it. I think wearables it was kind of wearables, Lou, I guess a couple of years ago, it was kind of a hot topic for stocks, and it kind of went away.
Yeah,
I think it's still there. And I think it's going to be there. And the monitoring that we're going to have between our phones and whatever, or the Oura Ring or our watch, whatever we're wearing, is just breaking through now. It will be something that's going to be common for all of us to be wearing something in 5 to 10 years, I believe. And this being one of the early leaders, I think you want to go with that.
Yeah, I agree. I think actually they probably could be the natural acquirer for Heartbeam, and the ticker's Beat. They have a credit card sized device that does basically synthesizes a 12 lead, but they have a patent on a patch so that you could just wear a patch that would be equivalent. So it's a wearable that would fit right into iRhythm's business model. So I love the business model. I love the space. You brought it up. I got to get one more out of you. You talked about being health conscious. You love Viking Therapeutics. It's a best in class GLP-1, right? Like, it's got to be the belle of the ball for either Novo or Eli Lilly to acquire. What do you like about it in particular?
I cannot believe they've not been acquired yet. So which scares me and tells me maybe I'm wrong. Because sometimes, the one thing you don't want to do is fall in love with the stock. And I would say I fell in love with this stock, but we've made some money and options with it in the past. We're down in a position that we have right now. I still like it because if you look at the numbers, the studies are much shorter than a lot of the bigger companies that have been doing a little bit longer, but the weight loss percentage is often the same or even better.
Yeah.
And and as far as safety concerns, not much as far as safety concerns. And they're working on both an injection, which obviously they'd be behind the big guys, but they're also working on a pill. So oral would be huge for them as well. So and again, there's gonna be so many winners in this Lou. And again, this is an example of a trend that turns into a mega trend, and we get ahead of ourselves and they go up and then people forget about it. But while those 2 years is going sideways right now, the GLP stocks, they're getting ready to take off again. And I think this will be one of them. And I would be flabbergasted if they're not acquired this year. I mean, if I was a big name, I would absolutely acquire them at this price.
No, I agree. Look, I've argued, like, scientifically, pipeline strength, Eli Lilly's ahead because they have retatrutide that's in the pipeline for it targets 3 targets, but Novo Nordisk is like the value stock that everyone loves right now. And I think Novo has to acquire Viking to get back into the game competing against the Eli Lillys of the world. So super supportive of that one as well. I personally own Viking. Want to make sure we end with where people can find you, right? And just so you got a 30-second, 60-second elevator pitch. Tell us what NextWave Research is all about, and then we'll put up on the screen a QR code and where people can find you.
Sure. First of all, thanks a lot for having me on. Great to see you. Great to be on here. Great show. Big fan. NextWave Research is kind of the culmination of what I've been doing my whole life, 25 years in this industry. I've managed money for 17 years, owned a broker dealer, had a crowdfunding company. I was on TV for 10 years. I had newsletter companies, sold everything over those years. Launched NextWave Research a few months ago, kind of taking the best of the employees that work for me, coming together, offering research for the average investor out there that wants to get through to fluff. The unfortunate thing about having access to information is there's too much information and too much bullshit out there that we have to get through that and really have some skin in the game. People that have managed money like you and I, that talk to these CEOs, that do deep dive research. And I want to make it accessible to everybody to get in there to buy stocks, and they don't have to just go buy the S&P 500.
Yeah, no, I love it. Look, we're very simpatico in that you do the due diligence, you get the rewards if you make the time and the effort. If you don't have the time and effort, Matt is a great way to short circuit that for you, so you get just the insights. Listen, man, I will buy you a drink once this sun goes down. Where can I look? Yeah, Alexander Castro. We just put the QR code on the screen. You can go to NextWave Research or find Matt on X and Matthew McCall. We'll tweet out this episode once we're done. Great topics. Matt, are you a buyer of BMNR or Coinbase at these levels? Interesting question. You're not getting out of the hot seat yet. Our listeners are making sure we get a little bit more.
Not BMNR, only because I've tried to do my research on it and I still don't. I can't put the correct valuation on it. I don't know. Again, and I'm so exposed to Bitcoin, it's absolutely nuts. So I'm fine not doing that. Coinbase, I do like. I was looking at it today, but I will tell you, instead of Coinbase, what I have on my list right now are 2 other stocks: Robinhood, which got crushed today, and Interactive Brokers. Interactive Brokers was interesting up today, and this is a major player in the prediction markets as well. So this is another way to play it. Interactive Brokers is the safest way to play this.
Interesting. I like that take, because Hood has got the most user-friendly platform. Interactive Brokers, I'd argue, is the least user-friendly, but they have the most access. They have the most access. It's the worst. All right. What about, all right. Chad Towers, if you haven't figured out, is our super loyal fan, and he's never shy on questions and insights. So last one before we let you go. Any thoughts on Oracle or Snowflake in terms of AI plays?
Sure. Oracle, obviously a huge pullback. I think the AI hype was a little bit too much there. We're up to almost 350 a share, down to 160 now. Probably not a bad long-term buy down here. Snowflake, I really like. I would rather own Snowflake going forward from here. And if you look at the charts, the 190 area, close at 191 and change today, is extremely important. If it builds a base at 190, just like it did in August, I think you have a great buying opportunity here. I wouldn't jump in right yet because it closed near low today, last 3 sessions. But I do like both long-term. I definitely lean towards Snow.
Not too bad off the cuff, my friend. I appreciate it. You are a seasoned pro. You've handled it all. I appreciate you joining the show, and let's do this again before too long. We don't have to be in Nicaragua at the same time next time.
Sounds good, buddy. Thank you so much, and congrats on the show and everything you're doing. And let's grab that happy hour drink soon.